rock and roll. Let's do this. Welcome back to the Opportunistic Trader for December 6th, a Thursday pre-unemployment. I don't really think that matters too much for what's going on in the market. There's a ton to talk about. I'm excited. I was traveling back in the control center driver's seat, so I'm happy about that. Last night, I just want to go over, before we get into the day before, which was Tuesday because there was no trading yesterday, I want to go over last night's opening on the E-mini S&P, because I don't know if most of you were watching that, but the S&P was open till I think 9 or 9:30 yesterday. It was up 18 handles. And what was interesting, and I didn't realize this, but someone pointed this out to me, that like the S&P options, they push the expiration up. But believe it or not, for SPY options, you could exercise your options yesterday. So there was no trading, there was nothing, but the cash was at 270 and it went to 271. So anyone that exercised the 270s, 70 and a halves, and even the 71s, because they were worth money, thought that they were going to get a break. I mean, people that did it against futures, that, you know, that's a lock-in. But anyone that did it that didn't lock in but thought they had the advantage literally lost 8 big figures in the SPY, pretty much from where they executed the trade.
Right.
So that's an interesting thing. And I don't know why our exchange, like clearing firms, were actually at work yesterday, you know, dealing with assignments of options that we're not trading. So I'm shocked that the SEC or whoever is in control of that didn't move it up. But anyway, on the reopen, the S&P opened flat and then literally dropped 60 points in under 5 minutes on 5,000 E-minis, which is something that I have never seen. I've seen a lot, but I've never seen that on electronic on an opening. And then literally 5 minutes later, it was back to almost where it came from. It was about $10 lower. So people contacted the exchange and they said all those trades are standing. And then interestingly enough, if you look at a chart, and it's funny, I talked to a friend last night, I said, you know, they always take that print and make it good by going back down there. And they made that print good by going 2 ticks lower, you know, early morning this morning. So that was something that I had never seen in E-minis, how it opened and literally you couldn't even pick it up. I was watching it on my screen live. It was not even updating. It was moving so fast. And when the exchange came out, they go high velocity trading. What does that mean, high velocity trading? So they called it high velocity trading, which I guess is computer trading. I don't know if people got stopped out on that or what had happened, but you know, the mantras are in place here. You know, lower, it's risk off, lower oil, higher dollar Canadian on the high of this dollar. Pretty much everything is on the dollar high of this move. And overseas, again, is worse than us. They're down anywhere from 2.5 to 3.5. I think they arrested the CFO of, what? How do they say it? Huawei, the second biggest phone maker, component maker. And I guess that set things in motion. But as Mike pointed out to me a little while ago, she was arrested 3 days ago. So it came out now, but she's been in custody for 3 days. Love that. If it came out over the weekend during the deal, the market would have been down where it should have been. The one thing that I want to tout myself on is that I said that 28.14 would be the high of the rest of the year. It looks pretty good that will be the case. I'm going to go out on the limb now and say we are going to take out the low that was made earlier at 26.08 or whatever that low was, 03, 08. And then potentially we are going to, depending on whether Powell has the nerve to do what's right, if he does, we could potentially take out the low that was made in February, which was about 25.30 something. So I think there's more to go. There's probably another 5 to 7%. Again, you have seasonality here protecting the market a bit, but you could have huge tax selling. Apple has a huge issue. I think Apple's low on this move was 171 and change, but I remember trading Apple in March at 150. So it's still up from there. These FANGs are higher. Amazon is nowhere near 1,400 where we're traded on the last low. So I don't know. I think that, I think maybe more of this move is banks. I think the banks and brokers are really bad here and have taken us down. And obviously oil dropping from in the 70s into the low 50s, probably back into the 40s if we keep selling off. And it's interesting. Vol is up very good today. It's up to almost 24. On the last low, we didn't even make it really above 25. On the first low down at 2,700, we made it to 29. But so I think people are a little skittish. The number tomorrow probably means a lot. I think they're looking at wage growth. If they get the wage growth, this guy is going to have to go. It's against the grain. They're trying to stop him from making any moves here. So, that's what I see. Vince, I don't know if you have any color or any thoughts. There's been a lot of news over the last 2 days. I don't know what your thoughts are.
Yeah. Hi, good morning. You can take your pick, or you can add them all together. But just quickly from macro overview, because most of us are active traders here. But just from macro overview, when you have the combination of QT, which hasn't ended, which continues to, people I think are believing more and more that Powell will not budge, combined with the I call it snatching failure from victory. There is a framework for a deal with China and the U.S. now, and it just seems now like, and this is my opinion, that anything that comes out of the mouth of a United States administrative official can only do damage on it. I mean, the Chinese are buying LNG offshore. They're resuming their oil purchases, and all these things you would think would be bullish for the market, and they were for a day. But there are secular bigger trends here that you alluded to that are driving the market lower. And I think although put it this way, the thing that doesn't make sense, which makes sense to me in a long-term way, is gold is nowhere. And I'm not going to focus on gold except to say that I hope people aren't buying gold as a safe haven. I hope people are buying gold because they know that the next move, and this is to your point, at some point, and I think it's with the S&P at 2,200 area, Powell actually will back off. Then we'll see a dollar weaken. But in the meantime, you're going to see stocks drop, and you're going to see bond yields drop, because right now, one of the what's the word you used? High velocity.
Mm-hmm. That's the word they use.
High velocity traders are the algos right now are focused on the inversion between bonds and stocks. So if bond yields drop or bonds rally, they'll sell stocks. And the options expiration you talked about, I think a lot of people exercised or automatically exercised on something they thought that was going to be in the money, and then realized they got stuck long exposure that they didn't want to, and probably rushed to the exits to sell. And at the same time, were front runned. I don't know what the past tense of the term is, by a lot of algos, and that just exacerbated. And like you said, any weird low gets to be retested. And
it's strange that happens, but it really, really does. But
it happens so frequently. It happens. Put it this way: this is why you're in a good market to trade. Whenever you have like a bizarre low that's from a fat finger or whatever the reason is, sometimes it takes weeks or months to retest that bizarre low. We did it in hours.
But usually on a quick move like that, that's not too far away. Like that move never went like 1% really away from where it was.
That's true. It was still in the overall range.
It was like in the range, but the markets are pricey. We're looking at options for tomorrow. The 25-50 puts, which are 115 handles out of the money for tomorrow, are $4. $4. I mean, that's sky high. Vols are out. It's interesting. I mean, the prices on these options are sky high. There's opportunity all over the board. So, we gotta look at that opportunity. We're gonna probably go to options today, put on some spreads, and see how all that works out. And overall, what I wanted to just touch on quickly, something that we kind of forgot, but we were covering a bit, which is not obviously our expertise. And actually, I probably am an expert in it because it's only been around a couple of years. And people are calling themselves experts that were blown out equity traders that are now trading it. But the cryptocurrency market, okay, nobody's talking about it. These, and I've been watching it because, we have people that come on that cover crypto for us, and I've been intrigued by it. But I've never seen anything debacle like this. There's something called Bitcoin Cash, okay? I started watching Bitcoin Cash like 6 months ago. 6 months ago, it was $1,000, okay? It is trading at $116, okay? I'll give you another one. What is this, Ether?
Yeah, Ether.
Ethereum.
Was off of Ethereum.
Okay, wait. I started watching it. It was $400. Okay, it's $99.
Right. Yeah, these are all products of the attempt to create liquidity with these forks they talked about, and they look like spin-offs. And
I don't know what it is,
poorly.
But this Litecoin, I started watching it at 110. It's trading at 28.
Right.
Bitcoin's 3,600, which is 100 points off the low. I mean, it would not shock me to see this thing at 2,000 or in that area by the end of the year. People need to, there's going to be massive tax loss selling in stuff because, people have booked huge profits and they have to do the offset. So I would expect to see selling. But the point that I'm trying to bring up is the market value of this. I'm going to call it dumb, because I don't even understand. It could be that they're doing 5 transactions a day on some of these. Right. I don't understand who's doing business over cryptocurrency when you don't have to.
Can I throw in the market structure, because I know that we're on Facebook today and I know people are interested in that.
Sure.
Just to add color to what you're saying, if you're looking at Bitcoin, the product Bitcoin, it's an over-the-counter thing that trades on things like Coinbase and OTC exchanges overseas. And Larry's point is that it is an illiquid product in that you may have wide bid asks, you may have chunky trades at a price, but it doesn't really trade continuously as much as you would think. Then you have a Bitcoin future, which is created and traded on the CME. And there's new products coming online all the time. Not all the time, but there's delayed. And the Bitcoin futures product does not settle in Bitcoin. It settles in cash. So it's a tracking thing. So you may see liquidity in Bitcoin futures. If you're trading this as a day trader, it's probably very good to trade. But if you're looking at Bitcoin as something that, oh, look how liquid it is in futures, that's not it. That's the tail. The dog of Bitcoin, the thing that wags that tail, is the over-the-counter market, and that's not as transparent. And so that's why it's risky to trade if you don't know what's going on off the screen. These are, the technology is the technology and it's good, but the products itself have serious growing pains, even the good ones. And that's, I think, what we're trying to say here.
But I don't, again, I'm just trying to look at myself, and I'm probably not, I'm the anomaly because I'm not that computer savvy, and I've never used Venmo, and my kids keep telling me Venmo me money. I don't even know what they're trying to do to me, but I'm not Venmoing anything to anybody.
Oh, give me V-Bucks, Dad? Is that what they're talking about? And
then the crazy thing is, with everything with this hacking, like my checking account got hacked. I mean, I don't even understand it. But, the last thing I want to do is go into other venues to try to maneuver money around. Now, if you're doing something illegal, maybe that's a good thing. But, otherwise, I just don't see it.
That is the weak link in the product. Blockchain itself may be, let's just say, we'll use the general term, unhackable. but everything that leads into putting your money into the Bitcoin is hackable. So wallets are getting stolen. Not to deride the product, but like you're saying,
Well, just going back quickly, a buddy of mine who lives in my neighborhood, he bought $200,000 worth of Bitcoin before it rocketed. He made over $1 million, and he wanted to liquidate. He called up, and someone hacked the money or hacked the wallet or whatever they did, and they took all his money. It was gone.
Yeah.
Okay, but better than that. So he thought he lost all his money. He's freaking out. And then it came back the next day after that. So he got all his money back. He got out. But who would ever want to trade in a system or a product that happens in? It doesn't even make sense. But anyway, the point of what I'm trying to bring up is the market cap on the whole product is now down to about $150 billion on all products across, like the 700 Bitcoins that are, or ICOs that are left out of the 7,000 that were brought. Everyone went, belly up. They're down 70%. So there's been huge amounts of liquidity taken out, like in the tunes of $200 to $250 billion have been lost. Now, listen, all of that was created out of the air in the year by I don't know who started the product. They have
we can't tell you that. We don't know.
I forgot they came up with some wild name.
No,
so if you really look at it, and I know what's his name, Buffett said it's rat poison, and he's right. I mean, eventually
he's right about that.
But anyway, I don't want to sidetrack too much on that. But
I have a question about stocks and oil.
Sure.
Level wise. You have said in the past, and I'd like to welcome on Larry's behalf all the Facebook people today. This is an active trading site, and we discuss macros from time to time, but we give levels that we actually trade. Skin in the game is not our motto, but might be my personal motto. And one of the things that I personally look forward to every day is trying to pick the trader's brain, or in this sense, Larry's brain. I'm a trader myself, but Larry's style is different than mine on what he's thinking. And I want to just throw a couple background phrases and see how that might affect today's activity. For example, when we made lows before, as Larry pointed out, the VIX was higher. The VIX isn't higher as high as it was then as we're nearing the lows. So one person could look at that and say, if you're looking at the VIX as a correlation with stocks, then maybe this sell-off is done and we should buy it. Again, we're ignoring news, whether it be real or fake. Another person could look at the VIX saying, well, the VIX isn't as high because last time we were lower and the VIX was high. That was the knee-jerk reaction. We could have a lot more downside here as a result of that. And so my question is, if you have a bearish bias, which it sounds like you do today, and with all the factors that are in the market, there's probably tax selling. That's true. I think there's some people who got who exercised without knowing these in the money calls that went off and had to sell in a panic. I think when you look at Citadel, when you look at Millennium, and you look at another high frequency trading firm that lost money for the year. High frequency algos are losing money, people. That means day traders are making money. And by that, if the S&P is unchanged on the year, and I'll make a number up, it's unchanged, but it has many 2% moves during the year, that's great for active human being traders. That means algos are buying highs and selling lows. And this is where, and this is a plug for what we do here. This is where you want to be, because Larry Benedict will trade a lot of regression to the mean. When algos have bought the top, that's a time that frequently he'll step in. When algos have sold the bottom, as they pile in like a bunch of people, if you forgive the term, at a Who concert in 1979, he'll trade the regression to the mean. So my question, Larry, with all that background for all the new listeners, and I know that they're quite a bit today, and I think it's very cool that we're doing this and getting the message out. If you, and I know you don't have to, and I know you don't like these questions, so I'm not going to give you that question that I normally give. What would you look at today to give you confirmation of your bearish bias, other than the market selling off? Clues or indications?
Well, I always look at clues, and I look at how other markets are holding up against our markets. So,
not necessarily today, what would you look at, but in general, I think a primer for new listeners would be good. Like, you look at the VIX, you look
No,
at
I'm going to go through it. I got it, Vince. I got it. Basically, what I like to do is I like to overlay foreign markets against the U.S. first and foremost. So, I would look at how much the DAX is down today. And the DAX, what's happened this year, and it's sort of the mantra for the year, is that European markets and Asian markets is basically what we look at, have been underperforming the U.S. significantly, Asia being down about 20% plus, and the DAX, which is getting absolutely murdered today, down almost 3%, is down over 15% for the year. We're actually just about flat to a little bit lower. So we have a ways to go. But on a day-over-day basis, you can utilize that. We also look at crude oil, seeing commodities, how they're holding up. We'll say oil's down 3% today. It's risk off. So we would want to look at oil versus the S&P and see if there's a correlation there. But we're looking to find the correlations. And then, most importantly, we'll look at our groupings of stocks. So, the first grouping, which is probably the most important to people that are short-term trading, is the FAANG. So we look at the FAANG names, including Apple, and we see how they're faring. And then what we'll do is let's say it's 9:30. We'll look at where the S&P is. So let's use 64, and we see Apple down 425, Facebook down 4, and the stocks down. We look at how that's faring versus the S&P, and that correlation is something that we look at to trade, as well as then drilling down more to industry groups like Friday, I keep saying Friday because we were off yesterday, Tuesday's sell-off of 800 points, which we really didn't get into, which I want to talk about after we talk about this, of why that happened and what we saw early on there. The bottom line is the bank stocks have looked terrible. The brokers look terrible. Goldman looks terrible. So we would look at oil. We'd have a grouping of oil stocks on our board and a grouping of bank stocks on our board, as well as consumer discretionaries. Just a number of different things. We can look at utilities, which have been exploding up, and that's a risk off. So we'll look at all the stocks and sectors, and like if we want to buy, we might think the banks are holding up, and we would buy S&P. If we thought that the FANG was looking better, we would maybe buy Nasdaq if we were looking to buy. As far as my view on the market is very negative. I discussed it earlier, but as a trader on a day-over-day basis, we have to be open to looking at what can happen, and the level of 62 here in SPOOs might be a level that you want to try the long side potentially for a trade if you see stuff, that looks a little bit better. Maybe oil firms up, that type of thing. And then we look at, I'm sorry, let me just go through a little bit more.
Sure, I'm sorry.
And then we look at volatility, which is one of our key indicators. And today it leads me to think there's a lot more downside because, like what I said earlier, the last time we were down at this level at 26.30, which was only a week and a week ago Monday, which was the low, and then we rocketed up 200 handles, and now we're back down about 150 handles. VIX never got to these levels. So the VIX is trading at 2409. If we have a sell-off off the opening, we could get to 2526. These are levels that we haven't seen. We didn't see on the last sell-off down to 2610. The highs were like 2627. So interestingly enough, we have to look at that. But one thing I wanted to point out is December volatility futures, and we're seeing this again. December volatility futures only 2120, which we can't understand why this discount keeps happening. So that's $3 under the cash, which is 15. ish.
Well, just 2 days ago, that was 50 cents above.
Right. Well, that's what's happening. Every time we go down, that stays at a discount, and every time we go up,
really
the cash moves a lot faster,
I
basically, than the future.
We actually do have a good idea on what's going on there, and you've said it before. And I know you're speaking in all humility here, but we've discussed this, and you have said yourself, fund managers, and again, this new listeners, follow along with this because we're going to put a framework around in a second. When the spot or short-term VIX is over the back month in what's called backwardation, we have noted that's likely because, among other reasons, it's likely because a lot of fund managers are scared to commit long-term to buying insurance or puts for their portfolios. So they buy at the last minute in a just-in-time fashion. And what that ends up doing is it ends up putting a Band-Aid on a bullet hole. And every time those options expire, they have to buy something else. And so you have this rolling pain that Larry is pointing out. And it's exemplified by having a front month or spot VIX over the 1-year VIX, rather than taking their medicine and buying a 1-year put and being able to sleep at night. These guys don't want to spend money because they're competing with index products that have no fees. And so they're causing the volatility that kills their own jobs. I mean, is that a fair statement?
Yeah, but I think there's a little more to it. I think there's a
lot more to it.
I think there's a lot of computer algorithms
around it for people.
But I think the computer algo is net seller of volatility always, because it's like buying the market, and they feel like the products are flawed, so they do that. But so getting back to what we were talking about before, volatility.
Yeah, things
would be a component.
Volume is dipping a little bit. I don't know if it's me.
My volume is? I don't know.
I think so. Maybe the microphone might have moved a little bit.
I don't know. I'm sitting like literally on top of it. But okay. Anyway, looking at the futures, we're down 40. The low is down about 50. I do think we're going to take that out on the opening very quickly. Apple looks like it's going to take out the low of the move here. I think people are leveraged long there. But getting back just quickly to finish up for the people that are listening, of what we look at, we're looking at bonds as well. And bonds, again, are giving away a very interesting signal. And I think, going back to 2 days ago, people say we were selling because the curve inverted, which is probably very negative and, sensing a recession coming. I don't know.
That was a big headline the last couple of days. You're right.
I think the housing market is tapped out. I think there's some real issues here, but overall, market feels much more skittish today in general. Not that we're moving quickly right now, but by volatility being at 24.25 right now, I just can't believe the VIX is 21.25. I mean, that to me,
at the long end,
it might be expiring today. Mike, would you? Is there a way we could see if the VIX futures expire? I don't think they do. It's too early in the month, but I'm just not understanding why it's not ticking. As this vol just keeps ticking up. So, we'll look at it. There's unbelievable. Every put on my board for tomorrow is at the same price, and they're all $5. Any put, the 2570s are $5.75, the 2565s are $5.50, the 2560s are $5, the 2555s are $5, the 2550s are $4.50, the 2545s are $4. I don't know what it means, but they're expecting a huge down move. If we get to 2550. Okay, the world will be blown to smithereens. Okay, it'll be taking out the lows of the year for the most part. It'll be putting us in what CNBC loves to call, a large correction or a bear market, even though we're barely down on the year. These things are out there. But looking at stock prices, they're pretty hammered all across the board. I'm surprised gold doesn't act better, but it's significantly off the low. Oil's the one to watch. It looks like it wants to slip down. Bonds are I mean, what's the yield on the 10-year now? Like
Right now,
two.
289.
I was going to say 290. I mean, that's an amazing move from 3.25. And it's funny. I saw Gunlock came out and basically is now, saying we're going into a recession. He's bullish on bonds, except
Yeah, I know.
when we were on the lows.
Well, yesterday we were talking about it. The housing market earlier in the year, they were saying, "Oh, we're selling the housing market's coming down," which was a bit of a leader for the entire market. That the housing market's coming down simply because yields are higher. But now yields on the 30-year and the 10-year have come off over 35 basis points, and housing's actually continued to be under pressure. So there's more to it. There's definitely. Today the ADP data, we haven't really touched on it. The ADP data came out. It was a bill. They produced 179,000 jobs, is what they said. Revisions, which was a bit of a disappointment. They were expecting close to 200,000, but still broadly in line. The number's been close to 200,000 for over a year now, and the yield market, the back end of the curve, the yields have moved down pretty heavily, but the markets haven't really, the financials are under pressure. Yesterday they were under pressure. Right now they're down about 1.5% now. So financials are making new low from this recent move. Paying attention to the yields. There's a lot of different stories out there, whether it be housing looking at yields, financials looking at yields, healthcare based off of the deals. And then anything related to technology right now in Huawei. The fear is that this is really going to spill over to other countries, other sectors. You see it in the global markets, like Larry pointed out early. The global markets are actually down more today than the U.S. markets. So we'll keep a close eye on that.
Yeah, it seems to be the mantra in general. It's weird. I think the market actually is holding up fairly well. The NASDAQ is doing better than the S&P in the sense that I think the NASDAQ is about 1% off the low, and the S&P is 25 basis points off the low. So, but obviously NASDAQ moves faster, and that could be taken out quickly. Off the opening, Amazon is holding up better than pretty much everything else out there on the board. Apple looks like it's got some serious issues. But again, Apple's still up on the year. So if you're in Apple, you're in a safe place. Facebook's down about 20% for the year. Netflix is up about 30% for the year. And Amazon's up probably about the same. So
we have energy heavy day today. We have a DOE report, which is coming out at 11 o'clock, but we have a lot of OPEC news that we're expecting more information on. Russia, OPEC, Saudi Arabia, a lot of interesting things. So we're going to be speaking with at 10 o'clock today, Phil Flynn of the Price Futures Group, Fox Business contributor. So he'll be coming on before the data. Then at 11 o'clock, as the data is coming out, Bryn Kelly and Mike Korn, they actually might come on a minute or two after the data, but they'll be coming on at 11 o'clock to talk all things energy. Then at 12 o'clock, we're going to be speaking with Commodity Research Group's Andy LeBeau, who will be further discussing the data and also the move in crude oil. And then at 1 o'clock, we'll have Tom McEntee and Vince Lancy talking options, really going over option strategies, looking at different ways to look for risk-reward opportunities. They've been doing a great job with that, taking questions from the audience, things like that. So a lot of energy talk. Vince, what do you have planned for the option talk today? Is there a specific topic in mind?
Tom and I have to talk about it because we have it's a process because and we have a lot of new subscribers that are beginners, and we have a lot of existing subscribers that are looking for more advanced strategies. And so Tom and I have been with varying degrees of success going back and forth. We'll start talking about a basic call, and then we end up talking about esoteric option risks. So we actually have electric collars on each other, Mike, where when he talks about volatility too much, I zap him, and when I talk about things like skew too much, he zaps me, because we want to make sure everyone understands it. But to your point, today we'll be talking about we'll be continuing on good and bad option strategies related to covered call writing and naked put selling. We'll also be talking about broadly software and different types of software and what they offer you. And we will be, of course, be going through the Greeks again And if we get a more complex question about how to take advantage of a skew mispricing, we'll do that as well. But that's an audience-driven thing. We have much more planned for that. Tom and I are going to be doing 2 or 3 different classes a week on that. If it's okay with you, I want to put a framework around something Larry said before, because it's important for people to understand, especially new viewers or new listeners, to what we offer here at the Opportunistic Trader. Is that okay that I do that before Larry wraps?
Sure.
Okay. You know, the when if you're an active trader or a day trader, it's important to have a routine or a discipline or a regimen, and everyone has their own. And part of what we do here is show you the type of regime or routine on a daily chronological basis that traders go through. So, for example, if I take away from this, a trader like Larry will get up, or Larry actually gets up, and after scanning the markets, he'll look at because a lot of his trading is, if I'm wrong, you can stop me, is equity indice. He'll look at the overseas markets to see how their correlation is holding up with U.S. markets. And this is something that you can't just do one day. This is basically a 30-year trading algo that comes out as a gut trade. So starting the day looking at the markets, then starting the day looking at the overseas markets and how the U.S. markets are responding, and then starting the day looking if there's any major news or FX currency moves, and then making up your mind on where you think the strong correlations are, or if there aren't any strong correlations that you're looking at, you look to see, well, the VIX is at 24 here, and the stock market is at 2660. Okay, the VIX goes to 26, and the stock market is at 2660. Then you start looking at, what's the NASDAQ doing, things like that. This is, although we do have a lot of macro information here, this is for active traders. And to get, and this is a plug here, but this is, I don't say it if I don't mean it. To get the full benefit of active trading insights, there are 2 ways. One is to listen and learn continuously, because it's not a one and done thing. This is not a textbook. This is a dynamic market, and we are dynamic traders. The second thing is everything you learn here, or begin to learn here, or get a handle on if you're already a trader. Frequently Larry will come in, and I will come in and say I've got nothing on my radar. But hours later, of course, I'll do one trade on gold, which is primarily my specialty, and Larry will have he'll come in saying he's bearish, and then buy the market and take 7 handles out of it in a rally. And that's because there's swing trading involved too. You won't know those levels. You won't know those actual trades. We don't put that out on Twitter. That's gold. And I don't mean that in a commodity sense. That's the type of thing that subscribers get. And I strongly urge you to get a better idea, to consider our webinar, which my understanding is low to no cost, to get an idea of what we do here. And that is, we have many people on the team that talk daily about fundamentals, but the actionable stuff that comes out of this site, that comes out of this meeting, you don't hear it in the meeting, you hear it on the site. And although there's plenty to learn, as we all learn every day in these conversations, there's plenty to do after the learning. For right now, I'm looking at the market and I'm saying, I don't know what Larry's going to do. Maybe I'll trade against it, maybe I'll trade with it, but I certainly am going to know what he's going to do when he actually does it. So that's the benefit. There are no other sites like this. And you can quote me on that. There are no other sites like this where traders that have been successful managing money for years have taken it upon themselves to build a business that they don't need to do for the public's benefit, as well as to create something that has long-standing value. That's my 2 cents.
Appreciate that. I agree with that. We're trying to help out people to navigate the marketplace. I'm looking right now, actually, as we speak, the DAX is down almost 3% on the day. We're only down about 1.5%. The DAX is through the year low. that it made earlier on. And I think it's down about 16 to 17% for the year. China's down 21, Hang Seng down 20. The FTSE, which we really don't look at, is through the year low. Everything is cracking other than our markets for now. I would expect the S&P to open lower than this and trade lower. I just don't know what level. Last night's action, even though it was a reopen and the liquidity wasn't there, it's not like anyone didn't know that we reopened at 6 o'clock on the next day. Everybody knows. So nobody had bids in. There was massive selling. We're back down in the area of that. So we're about 5 or 6 handles from the low of the entire move. We should take that out on the opening and then look to trade. The better trades today are for those people that have option accounts, selling maybe put spreads and call spreads, because the volatility is so high. There's opportunity around. Keep an eye on Apple. If Apple trades through 170 level, I think you'll see some stops. It could exacerbate the selling. It might be an area in here to buy for a trade on the long side, but not unless we get into the 60 handle at some level for a trade. Markets feel very skittish. The market S&P isn't moving that way. It's really kind of tick, tick, tick. We haven't seen any acceleration. We're about 15 minutes before the opening. I expect that to pick up, but keep an eye on the foreign markets. The Nikkei is down 3%. They're actually down the same amount. They're down 2.91%, both the DAX and the Nikkei, and we're only down 1.7% on the S&P. So we expect some selling to come in here off the opening. I wanted to just quickly go back to Tuesday because I was actually in a meeting for part of Tuesday, and I was getting hit with texts that there was a big program that was out there with $30 billion for sale. And it was funny, it coincided with at the quarter end where they had $30 billion to buy, but it never showed up. But there was some big selling out of CTAs, and I guess we went through some critical numbers, and I guess the yield curve inversion created selling by the computer. And then what happens is these algorithms cheat, and they could see through the markets, and they know when selling is coming, and they run in front. So between them knowing the program was out there and them selling, it created, the 800 point down day. We're going to open down about 500 this morning, 450, 500. We're going to see if we can hold. Potentially we could have back-to-back 800, or this could be 1,000 point down day. But, there's some inherent pain, and the year is wrapping up. And as we said, we're in the home stretch. I'd like to see Tommy Lee, the guy that used to be at JP Morgan, who's bullish on Bitcoin. His year-end target's like 20,000. It's trading at 3,000, and his year-end target on the S&P is 3,000, and it's trading,
I know
25% away. I mean, how does that guy show his face? I know he's going to come on. I'm bullish. So they're this market's hurting some people. Keep an eye on the DAX. That's an important one today. It's actually bounced a little bit. Oil is holding at 51.40. We'll keep an eye on that. Those are two key things to look at today. And I'm done. We're going to be looking in the option market today, but I'm done. There's 14 minutes to the opening. I don't know if you have anything else to say. Oh, news must have just come out. The SPOO just rallied $5. Trump did another deal. The China deal is done. No, I'm only kidding.
Okay.
I'm only kidding. No. But that's the market. It's like every time it moves like this, I go, Mike, do you see anything? Because I don't see anything. And then like 3 minutes later, it's like a Trump tweet.
We make light, and we talk about that a lot. But the reality is, we all deal with the markets, whether they're real or fake, or the news is over or underplayed.
Well, no, the news is just algorithms. It's so if there's a positive thing in the algorithm, it just explodes up because there's no liquidity, and then people look around, and then the market settles back in.
Correct. Correct. One of the things, and this is for people that scratch their head about why algorithms have advantages. Just to put a little bit finer point on that, if you're a market maker by the exchange, given official status, algorithms were originally created so that you could expedite fills for clients. So you were allowed to be faster than other people, so they can get a better fill, and you were actually able to see through the depth in the market. So if a retail investor is 6 bid underneath the market and the market is 7 bid, the algorithm, which is being used by the alleged market maker, or what used to be called a specialist, he can see the depth of the book all the way down. And because of that, instead of using the algorithm to create a more efficient market to give him a nice offer, he could say, well, I see an imbalance in the market, I'm going to either front run it or not. And that's why there's an unfair advantage, and it's based on market structure. The irony is, Larry, that last month was the worst month for HFT algos at Citadel, Millennium, and another place that I can't remember, which tells me that in a market that's unchanged, with 2% moves every day, they buy the highs and sell the lows. And I think it's the time for the human algorithm to make a little money. That would be you. You're the human algorithm.
Yeah. Well, listen, the algo has the advantage because they're front running your order. Okay.
Right. Well, we battle that by putting orders underneath. I'm just kidding here, but we battle that by putting 5,000 lot orders, 10 handles on the market, and then just removing them.
I mean,
but
listen,
I guess that's
we could do a whole show on what the rigging is here, but the high speed just runs in front of your order. They don't really take risk, and that's for a whole nother day. But anyway, we're 10 minutes before the opening. I want to get prepared for the opening. I'll be back to everyone after the opening. You can join us in the chat room and get really good information from our team. And I look forward to seeing everybody, or actually not seeing because it's the chat, but chatting with people in the chat room. And if anyone has any questions, feel free to ask me. But today should be really good. Volatility is up sky high. The puts are bid. The 25/50 puts are now bid $5. They were bid $5 with the future $7 lower. So people need protection under the market. This market looks shaky. It should sell through the low of 2,600 either today or tomorrow. That's what we're looking for.
Scary.
Yeah, it's actually not. That only put the market down 2%.
People
People are just used to making money.
It's scary that I think people will panic because the market's down 2% on the year.
Right,
Imagine
that's what I'm saying.
China.
People can't handle it. My brother-in-law, is at a large firm, and the guy's portfolio is down 1.5, and he's freaking out on him. Literally, he's telling him he's going to pull the account down 1.5. So if people go down 10 or 15, it's world over. So anyway, I want to get ready. We could keep chatting forever. I'm going to get ready for the opening. I wish everybody good luck. Keep an eye on the DAX today. Keep an eye on oil, and then keep an eye on bonds, which are breaking out to the upside and literally blowing people out of the building. I mean, that trade was oversaturated to the short side, and it's really the long bond's up 10 figures. So that's a big move. And, the market is basically telling Powell that he has no clue what is going on. And if he raises now, the whole curve is going to invert.
The inversion continues and stocks go off, and algos are playing it that way. And that's pressure being put on Powell by the market. Even if Trump's not complaining today, the market is doing his complaining for him. That's a good point.
Keep an eye on Apple. It's basically near the low of the entire move. It's down another 5 after being down 8 on Tuesday. I keep saying Friday because we had the day off. But anyway, good luck to everybody. We'll be back after the opening, but keep an eye on those things.